Let's in fact pose those questions and more to Shailendra Kumar. He's Director and CIO of Narnolia Securities, joins us right now on the show. Lots to talk about the markets as well, but since we're on the topic of Prabhat, and I know Narnolia as a house tracks Prabhat very closely, Shailendra, thanks so much for joining in. Just your thoughts. I mean, when this deal got announced in the morning when the stock was up about 15-18%, did you envisage that the lack of certain clarities could drag the stock down so much? And now that it is trading about 4-5% lower, what would your message be to clients who probably own the stock of Prabhat Dairy?
Yeah. So our analyst had a buy rating before on Prabhat, and today's early morning the jump in the price, the target got met also. Having said that, see, the idea today after the announcement, somebody looking to buy Prabhat is very simple. Now you are not buying a company which is into dairy business and the business is growing by 20% per annum on a regular basis. Now you are buying a company which is into animal feed. So purely for from an investment perspective, a longer term story, the Prabhat is no longer the kind of company you thought, say, till yesterday evening. The second part, which is mostly debated, like how the capital allocation is going to happen by the management now. This is a very new company as far as the listed space goes, only listing in FY16. So none of us has a very clear thinking about how the capital allocation policy of the management would be. So somebody looking, I mean, this stock for next couple of quarters, say Q1 or Q2, the deal gets done and you have a full clarity. In between, some price movement will happen because of arbitrage opportunity, which will throw it up in terms of, so even after DDT, there will be good amount of cash on the table if the allocation remains strong by the management. So that will keep moving the market. But the idea is very simple. Now, from a long-term perspective, this stock is not a dairy business stock, it's an animal feed business. So the whole dynamics, the way you analyze for a longer-term investment will simply change. So that's very important to understand for investors.
Yeah, but that is from a perspective of somebody who's, probably looking at the business afresh. Somebody's already invested in it and is hoping that, something comes out of this for them with the kind of statements that the management has made that they are going to look to pass on the benefits to shareholders. As per our calculations, that doesn't leave too much on the table for shareholders.
Okay, can you come again?
I'm talking about what is in it for the current shareholders, keeping in mind the price of 1,700 crores that they've got and leaving aside the possibility of all the other payments that they have to actually make, and with the final cash left with them, is there much left for shareholders?
Yeah, so the decline in the price for somebody who is trying to look for some kind of arbitrage gain, still there will be some opportunity in this very short to medium term. But for us, where the purpose of buying the stock was basically betting on a long-term growth story, that is out of the question. So somebody looking like us who is looking for 2-3 year story always to buy, this stock is now off the radar.
Okay, got that. That's on Prabhat Dairy. The stock anyways is down about 5% right now. Another stock that Shailendra tracks very closely is Ashok Leyland. The stock now at its 52-week low, and today as well succumbs to pressure. 3% under, 87, almost 88 on the counter right now. Volumes are also high, so about 23.5 million shares have been traded there. Shailendra, what's your view on Ashok Leyland now?
See, on the margin, for sure, Ashok Leyland operating business is deteriorating a little bit. So look at the last 5 years, between FY14 and FY18, for the MHCV, which is the higher margin business for commercial vehicle player like Ashok Leyland. So there the volume grew almost double. So from 60,000 number of MHCV sold in FY14, the number was 130,000 in FY18. LCV grew very small, so from 29,000 it grew only to 43,000. So LCV growth was very small, MHCV was growing very rapidly, and MHCV is a higher margin business. Now, for last 1 year, we have seen MHCV growth coming down, initially because of axle load and then some NBFC financing issue. So but the growth is coming very strong in LHCV, the LCV business. But the problem in LCV is a very competitive market. Mahindra is there, Eicher is there, Maruti has come up with a new model in LCV segment. So this segment, the margin pressure will continue. So from here on, in terms of overall volume, we believe LCV will compensate for the loss of volume in MCV. But because LCV being a low margin business, the profitability will get a dent. Having said that, on a FY 2021 number, you have a company getting sold at 7 times EV to EBITDA. So for us, on decline, it's still a buy. Of course, the kind of growth you saw between, say, 2014 and 18 is a little bit of a past.
Interesting. Would that thought hold true for the auto anchors as well, whether CV led or otherwise? Do you believe that companies which are trading, for example, a Jamna Auto traded at 100, 105 rupees, now currently languishing at 60. Motherson Sumi, not exactly a CV supplier, but has come off quite rapidly as well. Do you reckon that these auto ancillary companies also would remain under a bit of a cloud for the time being?
See, what I said for Ashok Leyland is very true for, say, Jamuna Auto as well, another auto ancillary name. The valuation correction which has happened in these stocks has happened more than what the fundamental deterioration would be, say, in next 3 years. So cycles surely for a year and a half will be not so good for commercial vehicle as well as passenger vehicle, I think. But the idea is the valuation multiple has got lot compressed, so one can start selectively buying on decline all these names. So I'll not say the business will improve. There is no trigger right now for next 1 year, barring BS6. So whenever BS6 comes, there will be some kind of a volume spurt for sure. But otherwise, there is no trigger. Volume will remain tepid, but the valuation multiple has got compressed to a level from where somebody longer term investor will find it comfortable.
Your point. So, Shailendra, just what is it that you would advise your clients to do right now? Because there is an overhang of lower growth worldwide. Maybe Indian growth too could come off, and the election year as well. Maybe there are no immediate big triggers for the markets at large. Where do you invest fresh money in? And do you invest fresh money right now, or do you wait for a bit?
See, surely this calendar year 2019, maybe the reward will not be very high, but it's a great year for somebody to selectively build portfolio. I think current level also is not a bad level to enter. Assumingly, you will spread your, say, some pre-election buying and some post-election buying. As far as the pocket goes, look at commercial banking sector. So the ICICI Bank of the world, Axis Bank, or say SBI of the world, they are coming out of a very 4 or 5 year bad cycle. Now, the pre-provisioning profit of these banks, which was growing already in double digits, say 12 to 18%, these names, the provision tapering off will gradually make good amount of changes in the fortune and the valuation multiple of these corporate lenders. So that's one space which I think is a story for the next 3-4 years. Current level, or maybe say 5-10% lower from here, doesn't make a much of a difference for a long-term investor. So that's the pocket one can start deploying. Apart from that, look at IT results. After a long time, some pocket of IT, it's a digital, which they're calling right now. The growth rate in top line of digital part of the IT business is almost 20%, 30% for other name. Now this is this is a very good, and for many of these names, the digital now constitute 30 to 50% of their overall revenue. Now that segment growing at 20%, 30% means some part of the revenue traction has come for IT. Margin has stopped falling. So that pocket again will give you good amount of earning for next 1 year. Apart from bank, commercial bank and IT, you can look for engineering name as well.
Okay, let's talk about one more stock which is in focus, and that is Sun Pharma. That is a stock that has been in the limelight over the last few trading sessions. Today, some clarity coming about from the management leading to the stock doing what it's doing. Some respite there, 5.5% higher, 420 on the counter. Following suit, Sun Pharma Advanced Research also. That's also doing okay for itself after yesterday's big 15% move. 50, or rather 20% move, in fact, Sun Pharma Advanced Research. Shailendra, what would the call be on Sun Pharma in light of the latest developments?
Yeah. So along with IT, between 15 and 17, pharma also got lot beaten because of business related issue, margin and working capital increasing in US market. IT surely looks to be getting out of that area. Pharma still is stuck where still there is no growth in terms of top line is concerned. The specialty chemical regime or maybe complex generic will take little time to get through the number for these companies. Sun Pharma has launched 2 drugs lately. One will be next year. Still the top line will not grow 10-12%, will be kind of a growth. Margin which has fallen for almost say like 30 31, 32%, say 4-5 years back, fell to 21%, but now margin is not falling. So business has become deteriorated, but has stopped becoming bad from here on. So there at least a kind of a shape in P&L you will see, or the profit loss account balance sheet you will see in the next say year or two. Now we know for sure the kind of thing that we are talking right now about the compliance and other kind of a legal matter around. Management has become very aggressive now addressing all those issues. They have come very strongly, and they are showing a lot of flexibility in terms of addressing. I am still not sure in terms of legal ramification in the broader sense, but the amount which is being talked right now, even if some provisioning has to happen in the book of Sun Pharma books is strong enough, and the management pedigree of facing a lot of litigation with global pharma major in the last 10 years, 20 years, a lot of legal things they have already faced in Israel and US, other places. So I have a confidence in terms of management pedigree that they can face this challenging period. Of course, there is no trigger in the immediate sense, but somebody looking for valuation and maybe a contra buy for say 3 years can have still some exposure, and can start having some exposure in a name like Sun Pharma as well.
Before we thank you, and we have the next management waiting, but one top idea from your end. You've discussed stocks that we wanted to talk to you about. One top idea from your end.
Okay, so like one name, as I said, corporate lending space we are thinking will do quite well from here on. One of the large corporate lender of India, ICICI Bank, I think still the valuation of ICICI Bank is much lower than even comparable other corporate lender in the space, say Axis Bank. So it's trading at a lower valuation than Axis Bank. The yield on advances of ICICI Bank is gradually improving, as well as the cost of fund is gradually, so NIM compression, because of which ICICI Bank valuation multiple got, lower than Axis Bank over last 2.5 years. Because the operating NIM is now improving for ICICI Bank, so gradually this valuation differential also should, narrow down. Books as such looks quite well provisioned, so that's one name for a good outperformance going forward.
Shailendra, maybe you just stay on, and I know we have the management of Shrey Infra as well, but we'll just have to go through them in a bit, simply because I'm told that the Asian Paint numbers are out, so just need to address them for a moment. Shailendra, I request you to stay on. Maybe you would have a comment on this. We're just waiting for the numbers to come in. The revenues were seen up 14% at 4886 crores, and the margins were seen about 20%, with the net profit growing to about 619 crores. I'm just waiting for the benchmark numbers to come out and then see how the revenues and the margin profile has looked like. Should be up on the screen any moment. Maybe the street is not too excited because there's an initial downtick on Asian Paints, but we'll just wait for those consolidated numbers to be out before we move any further and talk about these. 1.7% lower now for Asian Paints. The margin picture was expected to be 20%. From what the looks of it, the margins to have missed the numbers a little bit. The net profit was expected to be 619. Even if they've maintained the profitability numbers, which I presume they have from the looks of it, but the margin miss would probably be impacted. 636 crores, I'm told, is the net profit. Quarterly profit at 636 crores. The flashes will come up. We expected about 619 crores. So the bottom line numbers are higher. But maybe there is a bit of a miss on the margin front. I don't quite know. I don't have the handle on the numbers right now. But the stock price reaction suggests that there's something amiss, because the net profit numbers are better than what was estimated.
There was anyways a talk about how the fluctuating crude oil prices have impacted the margins for Asian Paints this time around. But yesterday, though, surprisingly, towards the end of trade, the stock actually managed to close at the high point of the day. But today's session, the volume picture, what exactly would that shape up to be like? Because the estimate was anywhere between 12 to about 15%. Maybe we could wait for the volume numbers as well, because that's the only number we have as of now, which is the profit number. That's at 636 odd crores. So optically, just by that one number, but the stock price reaction is a telltale, so there has to be a miss on one of the other bigger parameters to see how this quarter's numbers have been like. So it most probably looks like the gross margins, which would have been impacted by the cost of raw materials. We'll have to wait and watch what further details we can get out.
Yep, let's wait and watch. Shailendra Kumar, just before we thank him, any quick thoughts? We have the net profit numbers right now at 636 crores on Asian Paints. Don't quite have the margin numbers as yet with me.
So
and 5293 crores is the revenue.
So 636 is surely better than what we 592. Okay. Yeah, so 636 is surely a number better than what our analysts were expecting. See, the idea to look for more here is in terms of gross margin. Next 2 quarters, the gross margin will surely improve because rupee, the crude has fallen and rupee depreciation is almost rested. So these two were, primarily responsible for, some kind of a compression on the margin front. So if I don't know how much of this quarter the margin expansion happened, the number is still not there in my hand. But I think next quarter or 2 quarters, the margin expansion surely will be, coming for Asian Paint. So when the detailed number comes, but I think the result, whatever it comes, the next quarter number surely will be better. The only concern for Asian Paint in the commentary I would like to listen to basically is, the auto segment and the industrial segment, there's a volume slowdown. So I don't know what the commentary is there by the management.
I think the decorative side of the business has shown double-digit volume growth, but there continues to remain a pressure on the margin side because of the higher raw material prices.